The Republican Party just canceled a vote on a war, not because they won, but because they were about to lose. Let that sink in for a second. Yesterday, the House of Representatives had a war powers resolution on the schedule, a vote that would have compelled President Trump to seek congressional authorization to continue military operations in Iran. Leadership knew they didn't have the numbers to defeat it, so Speaker Mike Johnson did the only thing left. He pulled it. No vote, no debate, delayed to June, at the earliest. The war keeps running. According to the AP and NPR, Republican leaders spent Thursday scrambling for votes they couldn't find. House Democrats were direct about what happened. "We had the votes without question, and they knew it," one Democratic representative said, and as a result, they're playing a political game. That is not a partisan spin. That is a description of exactly what occurred. A majority of elected representatives wanted to hold a vote on whether this country should be at war. The people in charge of the schedule said no. This matters in a way that most of the coverage is significantly underselling. The War Powers Resolution of 1973 exists specifically because Congress watched itself lose the power to declare war, one emergency at a time. It set a 60-day clock. You can act fast in a crisis, but after 60 days, you come to Congress or you stop. Trump's strikes on Iran began on February 28th. That clock expired weeks ago. The White House's response has been to argue the clock doesn't apply because of the ceasefire, while simultaneously, Trump told reporters Thursday he was an hour away from ordering new strikes. You cannot simultaneously claim the war has ended and reserve the right to resume it at any moment. That's not a legal argument. That's having it both ways and daring anyone to stop you. Here's the thing the mainstream press keeps tiptoeing around. This isn't a story about Democrats versus Republicans. PBS's own reporting noted that Representative Brian Fitzpatrick, a Pennsylvania Republican, voted for the resolution. Several Republicans have now said openly that the legal timeline has expired and the law must be followed. The reason Johnson canceled the vote isn't ideology. It's arithmetic. He doesn't have the coalition. And rather than let the House work its will, he blocked it. That's the story. The institution designed to check executive war-making just had its leadership actively prevent it from doing its job. Not because the votes weren't there to check the war, but because the votes were. The war in Iran continues. No authorization, no vote. Congress leaves for Memorial Day. Now let's talk about the market rally that's been built on a foundation of wishful thinking. The Dow closed today at 50,723, a new all-time record. Markets have been climbing all week on signals from Secretary of State Rubio that Iran ceasefire talks are showing good signs. Equity investors heard good signs and apparently decided that meant peace was near. CNBC reported this morning that the two sides remain deadlocked on the exact same two issues they've been fighting over for months: Iran's enriched uranium stockpile and tolls on the Strait of Hormuz. Iran's supreme leader has stated publicly that uranium stays in the country. Trump told reporters Thursday that a Hormuz tolling system is unacceptable, his word, and that the U.S. has total control of the waterway. Those aren't negotiating gaps. Those are foundational disagreements about sovereignty and nuclear rights that a goodwill phone call doesn't fix. Pull the tape on what's actually happened. Pakistan brokered a 2-week ceasefire on April 8th. The Islamabad talks in mid-April lasted 21 hours and produced no agreement, not even a memo of understanding. The ceasefire has been violated by both sides, subsequently imposed a naval blockade on Iranian ports. And yet the Dow just hit 50,000 for the first time in history, apparently because Marco Rubio used the phrase "good signs" at a Miami press conference. This is not analysis. This is sentiment trading on vibes. Oil is still above $100 a barrel, the fourth straight week of declining domestic stockpiles. The 10-year Treasury yield is at 4.58%. Consumer sentiment, per today's University of Michigan final reading, came in weaker than expected. Edward Jones flagged all of this in their morning note and then watched stocks open higher anyway. The market is selectively processing information right now, accepting any signal that points toward peace and ignoring everything that points toward a ceasefire stuck in the mud. And look, none of this means a deal is impossible. It means the market is pricing a deal as if it's already done. That's a very different risk profile. When a resolution does come, if it comes, there may be nothing left to price in. And if negotiations collapse again, as they did in Islamabad, it could change everything. The downside repricing is going to be abrupt. The record high today is real. What's underneath it is a lot shakier than the number suggests. And then there's this. The SpaceX IPO is 3 weeks away. And the more you look at the structure of this deal, the more you have to ask who exactly it's designed to benefit. Here's what we know. SpaceX filed its S-1 on May 20th. June 12th listing on the NASDAQ. Ticker SPCX. Target valuation of $1.75 trillion. Goldman Sachs leading a syndicate of 21 banks. 30% of the float going directly to retail investors. 3 times the normal allocation for a deal this size. Accessible through Robinhood, Fidelity, and Schwab. A 5-for-1 stock split already approved to make the per-share price look more affordable. And a float of roughly 5% of total shares outstanding. Let's start with the 5% float. That number is not a detail. It is the structure of the entire event. When only 5% of a company is actually available to trade, you don't need enormous organic demand to move the price. You need a fraction of the capital that normally drives a megacap. Invez reported analysts raising the possibility that retail investors are being used as marginal buyers specifically to offset institutional hesitation. That sophisticated money has looked at a company burning $28 billion in a single quarter and decided they'd rather see retail get there first. Fortune ran a piece this week calling SpaceX potentially the least shareholder-friendly public company of all time. And that's not hyperbole. Elon Musk controls the voting structure. The retail investors get essentially no governance rights. And the XAI merger that inflated the valuation was done entirely at Musk's discretion. Jim Cramer, who is not someone I typically cite as a voice of caution, went on Mad Money and said directly that this IPO could create a bubble unto its own. He warned about the dot-com parallel. A small float, massive hype, explosive first-day pop, then the institution's exit. He said, and I'm paraphrasing closely here, that if SpaceX releases just a sliver of stock, the valuation could race toward $5 trillion before logic reasserts itself. That is not optimism. That is a warning about the mechanics of manufactured scarcity in an already hot market. Here's my problem with this deal as structured. SpaceX went from a private valuation of $350 billion in late 2025 to $1.25 trillion after the XAI merger in February to $1.75 trillion at IPO. That is a 5 times appreciation in under 6 months, entirely in private markets, where most retail investors had zero access. Now, with the gains already banked and the losses mounting, $4.94 billion in annual net losses last year, $28 billion in Q1 2026 alone, the doors are being opened for everyday investors to participate. That sequencing should give you pause. The people who made 5 times their money are selling. The people who get to buy in now are the ones on Robinhood. The business may be transformative. Starlink's 3 million subscribers across 164 countries is genuinely impressive, and the launch monopoly is real. But at 95 times revenue, with deteriorating per-user economics on its main product, the price being paid today is not for what SpaceX is. It's for what investors are betting it becomes. That's a wager you're entitled to make. Just understand that on June 12th, with a 5% float and retail holding 30% of it, the price on your screen is going to tell you almost nothing about what the stock is actually worth. A war being run around the institution designed to authorize it. A market rallying on ceasefire talks that have failed twice already. And a $1 trillion IPO where the gains were made in private and the risk is being transferred in public. The question I keep coming back to is this: at what point does the gap between what institutions do and what ordinary people are exposed to become something more than a pattern? Congress writes itself out of accountability for a war. Markets price outcomes that haven't happened. And an IPO structure is built so that the people who needed access the most got in at $350 billion. And the people who are being given access now are buying at 5 times that price, with no voting rights and a 5% float. Is that a coincidence? Or is that just how the system is designed to work?